Now friends, let us do the discussion with respect to the unit holder, and you will have to pay a little bit of extra attention friends now. Very important, one of the point as a matter of interpretation that is going to come. Okay. Now see, first of all, when it comes to a unit holder, okay, whatever is exempt under 1023 FC or FCA will become taxable in the hands of the unit holder. Okay. So ideally speaking, see, the unit holder should be taxable for 1, 2, 3 and point number 8. Okay, because these incomes were considered as exempt in the hands of the business trust. Okay, and business trust has already paid a tax on 4, 5, 6 and 7 items. Okay, so for that unit holder need not worry, unit holder will take it as exempt. Okay, so unit holder, if you see here, unit holder, if you see here, Mr. Raju, resident person, is holding 10% in this particular business trust. Okay, so all the figures for this Mr. Raju is going to become 10%. Okay, because he is a 10% investor. So interest income beta limited 4 crore. So for him it will be 40 lakhs. Okay, because you have to do the computation of Raju. Okay, so dividend income for him 2 crore. So it will become 20 lakhs. 5 crores means it will become 50 lakhs. And rental income 2.5 crores. So it is going to become 25 lakhs. Okay, this should be ideally the income, and the nature of income should be the same in the hands of the unit holder. Now come to this particular point. First of all, see, and there is one very typical interpretation, a very typical interpretation friends. See, this subclause 3, okay, any money which is distributed received by the unit holder which is in nature of 2023 FC or FCA income, then such distributed income part thereof shall be deemed to be the income of such unit holder and shall be charged to tax in the previous year. Okay, so this particular clause makes it very clear that whatever is the exempt incomes which are distributed will be deemed to be the income of the unit holder. It's very much clear, and it will be of the same nature. It will be in the same nature in the hands of the unit holder. That is subclause 1. When you read these two things very much clear, it is very much sure that exempt incomes in the hands of the business trust will become a deemed income in the hands of the unit holder, will become deemed income in the hands of the unit holder, and it will be of the same nature. As simple as that. Okay. Now, the unit holder will also be having a TDS obligation. So now when the business trust will make payment to the unit holder, it will be subjected to the TDS obligations because it is a taxable transaction now in the hands of the unit holder. So for that, see, this is a TDS provision, okay, 194 LBA provisions, which is basically for the unit holder. Okay, so 2023 FC income, FCA income, and to a unit holder who is a resident, then the rate is provided here. Okay, so this is one of the clause. So FCA income to a resident unit holder. Okay, then if you are a non-resident unit holder, FCA income, okay, then this is the rate already provided for non-resident person. Okay, for a non-resident person, if it is FCA income, then this is this clause. So basically all FC and FCA income only, no, which is exempt and will now become taxable in the hands of the unit holder. So for that, the applicable rates will be covered with respect to the rental incomes. Okay, so these will be your TDS obligations. Okay, so TDS is there whether your investor is a resident or a non-resident. All these percentages are specifically provided, and it is a clear-cut provisions. Okay, now comes the real good thing. Okay, as a matter of interpretation. See, things are pretty simple and pretty clear. Okay, but a complication. Now, see, come to these particular provisions now. This point, and this is really complicated, little bit complicated. See, the 115 UA provision already specified, that what will be taxable in the hands of the unit holder. Okay. The mirror image of that is 1023 FD provisions. It says that what will be exempt in the hands of the unit holder. So quite natural, no, that if the business trust has already paid the tax on that, okay, so in the hands of the unit holder it should be exempt. Okay, this is covered by 1023 FD. Okay, logically, and if the business trust is already taken the exemption, then it will be taxable in the hands of the unit holder. That is provided by 115 UA provisions. Absolutely clear. But now this 1023 FD provision is a little bit of a complication. Okay, it ideally should give exemption. It ideally should give the exemption. Okay, with respect to all the incomes which are already taxable in the hands of the business trust. Okay, that way it should already be covered there. Okay, but the language here is the fun. Okay, the language here is a fun. See, let me change the color. Okay, 1023 FD. Now let us interpret this provision very, very carefully. Here some complications there. Distributed income referred to under 115 UA. 1023 is basically the exemption provision. That means the distributed income under 115 UA which is received by the unit holder from the business trust. Okay, that will be eligible for the purpose of exemption. Okay, so basically whatever income that you are distributing will be eligible for the purpose of exemption, not being blah 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 blah. Okay, so logically whatever is the exempt incomes in the hands of the business trust, that cannot be again given the exemption here, repeated exemption. That's the reason there is exclusion. Okay, so it says not being 1023 FCA A provisions. Okay, so this type income, interest income. Okay, this particular interest income, whatever received in the hands of the unit holder, okay, will become not exempt. That means it will become taxable. Okay, so see, it will be exempt not being this income. Okay, so if you come back to the question, first of all the interest income. Okay, this particular interest income, will it be taxable in the hands of the unit holder? Yes, it will be taxable in the hands of the unit holder. Very clear. That also we have said that it should be taxable, no, because these incomes have been taken as exempt in the hands of the business trust. So no problem, no problem, no problem. Now the problem comes. Okay, or subclause B. Okay, so what is this subclause B? This subclause B is a dividend income from special purpose vehicle. Okay, so this will not be exempt. That means this will be taxable. But see the bracket now. In case where a special purpose vehicle has exercised the option under 115 BAA. In case where the special purpose vehicle has exercised the option under section 115 BAA. So only where it has exercised the option under 115 BAA provisions, okay, only then it will become taxable. My God. Okay, this is only point, this is the only one point from the, what should I say, the unit holder point of view, if it has exercised the option under 115 BA provisions. Okay, so see here, now Beta and Hind, both of them are a special purpose vehicle, but Hind Arc has opted for 115 BA. Okay, so Hind Arc will be, which is already covered by 115 BAA provisions, Hind Arc, that will be taxable in the hands of the unit holder. Okay, put it differently, these 20 lakhs of rupees will not be chargeable to tax in the hands of the unit holder. Ideally, it should have been chargeable to tax, but it will not be chargeable to tax because this Beta Limited data about it exercising the option under 115 BAA provisions is not specifically mentioned in the question. Okay, so this will be taxable, or now it's or 1023 FCA income. Okay, so 1023 FCA income will not be exempt, that means it will become taxable. So this is your basically the rental incomes. Okay, so if you come to the question, this point number 8 will be taxable in the hands of the unit holder. Is that very much clear? Now, see in the TDS provisions for these 20 lakhs transaction also, there is no TDS which is specifically provided by the law. Okay, see. And this is one of the points that can really be catchy sometimes. One second, let me scroll TDS provisions. Okay, LBA TDS provisions. Okay, look at this subclause 2A. Nothing contained in clause 1 or 2. Okay, 1 or 2. 1 or 2 is basically this above clause, this clause. Okay, nothing contained in this particular clause will apply with respect to 1023 FC B income. This B income is basically the dividend income. Okay, B is a dividend income. If the special purpose vehicle referred to has not exercised the option under 115 BAA. Okay, so if it has not exercised the option, it has not exercised the option under 115 BAA provisions, then these particular provisions, nothing contained in this particular clause will be applicable. Put it differently, in the given situation, it says that if the special purpose vehicle referred to in this clause has not exercised the option, that means if it has exercised that particular option of 115 BAA, only then it will be taxable and only then it will be subjected to the TDS provisions. Is that very much clear? Okay. So, further, one second, I guess that this point is very much clear. So, if it has exercised the option under 115 BAA, then it will become taxable, and if it has not exercised, okay, then it is not taxable, so no TDS. Simple. Now further, fair enough. So this 40 lakhs, 50 lakhs and this 25 lakhs. Okay, this will be taxable in the hands of the unit holder, and TDS provisions also I have already explained.